This is something that I spend a lot of time thinking about, and I know why Fannie Mae and Freddie Mac, which are the subjects of this book, are are important companies. But why don't you start by telling us a little bit about why you wrote the book and why Fannie and Freddie are so important to kind of the broader populace?
Okay. So I started covering Fannie back in 2004 when I was still at Fortune, and in the wake of this big accounting scandal, each company had a big accounting scandal. And at the time, I think I was shocked to find out that companies like this existed. I mean, what is a government-sponsored enterprise? And what a government-sponsored enterprise in this case is Fannie was created back in the wake of the Depression by Roosevelt in order to help make homeownership more widely available. And the idea was that if you had this institution that could buy up the loans that banks, lenders had made, then that would free those lenders to go out and make more loans because they wouldn't have to worry that their capital was all tied up in the loan they had made. So the idea was this would help foster homeownership. And that was the beginning of Fannie Mae and this very unique system in the United States. No other country has it. No other country has a 30-year fixed rate, fully prepayable mortgage either, the way we do. And most people credit that to the existence of Fannie and Freddie. And so these two companies have grown to be absolutely enormous. Fannie and Freddie together are the largest financial institution in the world. They own or guarantee over $5 trillion of mortgage-related debt. They're absolutely enormous. They're critical to the functioning of the global financial system, and they're sort of part of the hidden machinery that makes our lives possible. Mm-hmm. When you go to the bank and get your mortgage, you expect to have a mortgage rate quoted to you right then and there. And for decades, Fannie in particular has been part of what has made that function seamlessly.
Sure. Yeah, and so I think in recent history, a lot of people know them as one of the first two companies to be taken over by the government. Some people say that they were at least partly responsible for the financial crisis. And I mean, a lot of people think that this is a problem that the government fixed a long time ago, right? Like isn't this like a 7-year-old problem? But now kind of here we are, and I guess how far have we gotten?
We haven't gotten anywhere. That's part of the problem. So the idea was there's the silver lining in the global financial crisis, right? I guess I should back up a little bit. You're exactly right. They were the first two companies that were. I guess there was Bear Stearns first, but then Fannie, but was sort of bailed out by J.P. Morgan in a sort of private transaction, right? Fannie and Freddie were put into this state called conservatorship, where they're supported by a line of credit from the Treasury and effectively managed by a government agency. And when they were taken over in the fall of 2008, the idea was this would be temporary. Conservatorship was supposed to be temporary. We were going to figure out how to reform the housing finance system, and we can talk about why people think it was problematic beforehand. We were going to reform them and get on with it. And yet here we are 7 years later. These two giant companies are still in this state called conservatorship. And this big public policy question, what do we want housing finance to be like, is still totally unresolved. I think that's an issue for every American with a mortgage. It's an issue for every American who has wealth tied up in a house. It's an issue for every investor because these $5 trillion of securities move through the global financial system like water. They're everywhere. If there's a change in the value of these securities or a lack of confidence in them, that will have global economic ripple effects.
Right. So let's back up a little bit, because I think a lot of people don't understand, literally what the function of Fannie and Freddie are. So I'm a homeowner. I go to my bank or lender to get a mortgage, and the lender grants that to me. So what happens then, and how is Fannie involved?
Yeah, so that's what's known as the primary market, when you go to a lender and you get your mortgage. But those lenders don't keep those mortgages anymore. At least they mostly don't keep those mortgages. They sell them off. And most of them, in the years since the financial crisis, the great majority of them get sold off to Fannie Mae and Freddie Mac, who then take them, package them up, and sell them off as securities to investors around the world. And the existence of this system, and Fannie and Freddie act as an insurance company. They guarantee the timely payment on those mortgages. So the investor who buys them has to worry that interest rates might change, right? But they don't have to worry that you, the homeowner, are going to be unable to pay, because Fannie and Freddie are guaranteeing that. So that system has turned American mortgages into something that buyers around the world can invest in without thinking twice, because they don't have to go through and analyze 100,000 Joe Lights and make sure all of you are really going to pay your mortgage. They can just buy these securities, knowing or feeling that they know that the securities are safe. And the way that system has developed, it means that a saver in China can and does finance the purchase of a home in Kansas. So it's turned, I think it's ironic in a way, it's turned American home ownership, I mean, what's more domestic than a home, right?
Right.
Into a global financial issue.
Right. And this is something that's unique to the United States, or at least to the United States, and maybe one or two other countries. So what does having this system in place give Americans that somebody in the United Kingdom getting a home won't get?
So that's part of a debate, right? There's some people who say if you got rid of Fannie and Freddie, there would be no impact. The market would continue exactly as it is, and private capital would fulfill the role that Fannie and Freddie play. I want to pause on that point for 1 second. The fact that Fannie and Freddie are government sponsored, I think, needs to be explained what that means. It's led to this implicit perception in the years before conservatorship that the U.S. government would stand behind Fannie and Freddie, meaning that if Fannie and Freddie couldn't pay, if you defaulted on your mortgage and Fannie and Freddie somehow didn't have the money to pay, the U.S. government would step in and pay. And that's obviously what happened since they were put into conservatorship. That system has given Americans access to a 30-year fixed-rate mortgage, which is something that people around the globe don't have. And that 30-year fixed-rate prepayable mortgage is a total fixture of American life. Right? I think I saw some data from the Urban Institute that some 80% of buyers who are buying a home are choosing a 30-year fixed-rate mortgage.
Right, whereas in other countries you'll have a mortgage with a much shorter term, with interest rates that change more often.
You might have a 10-year mortgage where the interest rate floats around, so you as a homeowner don't know what your mortgage payment is going to be every month because it moves as interest rate moves.
Right.
So if interest rates doubled from 5 to 10%, your mortgage payments could double every month.
Right.
So the existence of Fannie and Freddie has made a mortgage a stable instrument, at least for the homeowner.
Right. So you talked a little bit about the government guarantee. So having the government in there and I guess giving this implicit suggestion, or whatever you want to call it, to investors that they were going to step into Fannie and Freddie couldn't. What did that get homeowners before the crisis?
So there's a good question about what that got homeowners before the crisis. I think it got them, the argument was always it got them a lower rate on their mortgages than they would otherwise have. The fact that Fannie and Freddie had this imprimatur of the U.S. government standing behind them meant that they could pass along lower interest rates, the lower cost on their debt, because it's perceived as safer, so it costs less to homeowners who could then pay lower rates on their mortgage than they might have to pay in a system without Fannie and Freddie. And it certainly meant, I think, this longer term mortgage. There was always a debate in the years before the crisis, well, how much of a benefit did that actually give to homeowners? In my view, that debate's a little bit moot since the financial crisis. In the wake of the financial crisis, private capital completely fled the mortgage market. If we hadn't had Fannie and Freddie there would not have been a mortgage market. And arguably, the downturn that followed the financial crisis would have been a lot worse. So Fannie and Freddie served the purpose of stepping in to provide mortgage credit when the private sector won't do it.
Right. So you spend a lot of time in the book kind of talking about the rise of Fannie and Freddie after their development and how they sort of accumulated political influence in Washington. Can you talk a little bit about kind of how they did that and the sort of the sort of opinions and fears of Fannie and Freddie that kind of came as a result?
Yeah, so ever since Fannie and Freddie were created, there were always people in the government and academia who said, what are we doing with the government presence in the housing market? We're a free market economy, we're a capitalist economy. What is a government-sponsored enterprise? Why can't private capital just take care of Americans' mortgage needs? So there was this just inherent sort of ideological resistance to the idea of Fannie and Freddie. In response to that, Fannie and Freddie developed real lobbying muscle. I think it was former Congressman Jim Leach who used to say that Fannie had the most sophisticated lobbying operation he'd ever seen in his entire life. And the reason they did that is because they felt like there were forces in the U.S. government that were trying to kill them. And you know what? They were right. So they developed this outsized aggression to any threat to their existence or any threat to take away their the advantages they had from this perception that the U.S. government would stand beside them. And they became a really formidable political force. And I think that in some ways intensified the resentment against them. You know, you have people who found themselves on the wrong side. And again, this was led by Fannie primarily. It's always been kind of the bigger and more aggressive and more powerful of the two companies. I think you had people who ended up on the wrong side of Fannie and felt that it really resented the company for the way it behaved. You had in the 1990s, Fannie's executives were real Democratic power players. Jim Johnson, the Washington Post, once called him the chairman of the universe. Frank Raines had been the head of OMB under Bill Clinton, and previously had been in the OMB, and was, you know, there was talk he'd be the first black president. I mean, they were Democratic power players, and they made a ton of money, and so there was a lot of resentment around that too. And I think there's always been, you know, the mortgage market is one of the biggest markets in the world, right? There's fights about money. People, private companies, banks, even mortgage insurers, other players in the homeownership market totally resented Fannie and Freddie's profits because it meant less for them, right? And so Fannie became part of this, I like to call it, I'm not the first to use this phrase, but the housing industrial complex. You know, this sort of loose-knit, really durable, sometimes fractious, debatably unhealthy kind of alliance of everybody who has a stake in this enormous enterprise that is the American mortgage market. And
I love some of the anecdotes you gave about kind of their lobbying prowess in the book. I mean, one of the ones you mentioned, if I remember right, there's a nonprofit that was offered a grant by Fannie, right? And then what happened after that?
Yeah. So ironically, and we can come back to why this is ironic, but one of the criticisms in the 1990s, one of Fannie and Freddie's responsibilities that was given to them by Congress is sort of a quid pro quo for these special advantages they had from the perception they were close to the U.S. government, was that they had to do things for affordable housing. And they had specific quotas of loans they needed to make that would satisfy these affordable housing goals. And during the 1990s, the constant cry from both housing activists and, ironically, from people on the right who didn't want Fannie and Freddie to exist was, they don't do enough. They're not doing anything. They're just all about their own profits, and they aren't doing anything to make loans more widely available. So this housing activist was criticizing them for doing that, only to call up Fannie he was supposed to get, his organization was supposed to get a grant, only to get a call from a senior person at Fannie saying, sorry, no more money. We're not going to give it to you. And he actually called Jim Johnson and said, you can't possibly be that small-minded, can you?
Right. Yeah. I remember a quote from the book. It says somebody describing their lobbying prowess. And it was something like, you know, they'll cut you up, gut you, and throw you in the river, or something like that.
It was a great quote from a Washington Post piece in the 1990s, and I think it's another of the great ironies, because Fannie Mae, it sounds like the candy company, it sounds like a grandmother, it sounds so sweet and harmless, and in reality it's this monstrous financial empire that had at the time just unparalleled political clout.
Right. So. Yeah, and you probably got this from your reporting too, but it seems like part of the resentment about how they acted is how much people felt that they depended on the government for existing in the first place. So on the one hand, you're dependent on us on our guarantee for your very business model, and on the other hand, you're spending all of this money, you know, threatening people around Washington, you know, et cetera.
There's a great quote in the book from Larry Summers, the former Treasury Secretary, and he says, look, if you were going to design a scheme to extort money from the U.S. government, you couldn't do it better than this. Basically, you know, have this hidden subsidy. And what an economist means by hidden subsidy was there was this implicit guarantee, this idea that the U.S. government would stand behind Fannie and Freddie, but it wasn't explicit. Fannie and Freddie didn't pay a fee for it. So it was kind of this free money that Fannie and Freddie could then turn around and exploit in order to pay their executives really well and to have huge lobbying muscle.
Right. So how do we know that that implicit guarantee was going to homeowners as opposed to the profits of Fannie and Freddie?
I think there's a big argument that it wasn't. There were a lot of studies done in the 1990s that said most of the benefit from it was flowing through to executives and to shareholders of Fannie and Freddie, not to homeowners. And at most, Fannie used to argue it was a small amount. It was like 25 basis points, which is 1/4%. So if your monthly mortgage payments, were $100, it would reduce it a little bit if Fannie's math was right. I think that's a good, interesting debate, but I think it's sort of irrelevant in the context of what happened in 2008, because the value of Fannie and Freddie is that they're there when the private market isn't. We may not need them in good times, but we certainly need them in bad times. So to say in this giant boom decade of the 1990s that Fannie and Freddie weren't providing much value, and then to ignore what happened in the fall of 2008 when private capital completely deserted the market, seems to me like a funny way to look at the issue.
Yeah, and although in the 90s, like politically, that did build a lot of resentment among people.
Absolutely.
There are a lot of people who were kind of looking for that chance to end it.
It totally helped feed the resentment of Fannie and Freddie. What do they do anyway? Why do we need these companies?
Right.
And there was always this chorus of people who said they're too big to fail.
Right.
They're going to land on taxpayers with a giant thud, and which is exactly what happened, even if it wasn't precisely for the reasons that people were predicting.
Right.
President Obama only a few years ago described it as heads we win, tails you lose. I mean, so it was, this idea that no matter what happened, Fannie and Freddie would win, because in good times they'd pay their executives, and in bad times they'd get bailed out by taxpayers.
Right, and you feel a lot of that even today. I mean, one of the Congress can't pass anything, it seems like. And then just a few days ago, one of the things that the Senate universally agreed on was to put a new cap on the pay of Fannie and Freddie CEOs. It seems like it's very fashionable to dislike these companies, even today.
Oh, it has become, I think, extremely fashionable to dislike these companies after the financial crisis, which is ironic because without them, I mean, the government dependence on the mortgage market's dependence on Fannie and Freddie has never been more than in the years since the financial crisis.
Right.
So you would think that would have given them some sort of mojo, but the hatred of them has intensified, and I think there's a clear reason for that. This narrative took hold and is very popular in a lot of circles that Fannie and Freddie and these goals they had to make housing affordable were solely responsible for the financial crisis, and it's kind of akin to a religious war in many ways, because if you can say that Fannie and Freddie and the government were solely responsible for the financial crisis, well then there was no problem in the private sector, and the private sector doesn't need any more regulation. The only answer is get rid of the government, and we'll all be just fine. Mm-hmm. And as a result of that narrative, even Fannie and Freddie's once staunch supporters have run from them. And Barney Frank was the congressman sort of most closely associated with Fannie and Freddie in the 1990s as a defender of theirs, and even he said they should be abolished.
Right, and it seems like another of the issues is that this isn't their first scandal, right?
Right.
There was an interim scandal that's easy to forget, even though it was easy to forget because of the financial crisis, even though it was less than 20 years ago. So what and this happened in the early 2000s.
Yeah.
What did they go through?
So this was my first exposure to Fannie and Freddie, was these accounting scandals back in the mid 2000s that led to the ouster of all of the senior management teams of both companies. And they were slightly different. The idea was that Freddie was actually understating earnings, and the idea was that Fannie was manipulating a really complicated accounting statute about how you account for derivatives and overstating its earnings. And it was a huge scandal. Fannie's management team was kicked out. The company had to do this mammoth restatement of earnings. Their regulator even called Fannie Mae a government-sponsored Enron. And just pause to think about how odd that is. Can you imagine, say, Citigroup's regulator saying that Citigroup is a government-sponsored Enron? I mean, those are big words, right? The really strange thing, and someone said to me that the story of the GSEs is like a mixture of Monty Python and Shakespeare, and it has all these like strange twists and turns. The really odd thing about that accounting scandal is that when Fannie actually released its restatement of earnings, its shareholders' equity went up, not down. Most important measure of a company's strength went way up. And despite all this rhetoric about how Franklin Raines was a fraudster, never charged by the Justice Department, never charged by the SEC. The judge ended up throwing out the civil claims against him, against him and Tim Howard, saying there was absolutely no evidence that either man did anything wrong. So It's a very, you would expect when a regulator calls a company a government-sponsored Enron, that this is going to end with a bang, right?
Yeah.
People in jail, and it ended with such a weird little whimper.
Yeah. So I mean, why do you think the government kind of overplayed their hand there?
I think it was deep-seated fear and anger against Fannie and Freddie, this real sense that they were abusing the position they were in, that they were lining their executives' pockets, that they were a huge danger to the financial system and they needed to be reined in. And Fannie in particular successfully fought every attempt to rein it in by muscling its political clout. And I think people who were very well-intentioned started to feel intensely frustrated at their inability to rein in Fannie and Freddie and their real sense that these two companies were a systemic risk. And I think the fight became very ugly on both sides. The unfortunate thing about it is that after the management teams of both companies were ousted, just at the beginning of the most dangerous bubble in American real estate in history, Congress was still unable to pass any new legislation reining in Fannie and Freddie.
Right.
And I want to pause on that for one reason, because I think it's really popular to say that Fannie and Freddie are a Democratic problem. You know, the Republicans are righteous on this issue, and Fannie and Freddie are the Democrats' problem.
Right.
But we had a Republican in charge of the White House and a Republican Congress, and they were still unable to pass any legislation. And
Right.
It helps explain where we are now. But you know as well as I do, Republicans are as reluctant to sort of disrupt this issue as some Democrats are.
Right. I mean, we had to start this conversation talking about what these companies do. You know, it's not
Right.
It's not something you can fit into a stump speech very easily, unless you're going to give the very blanket, you know, let's just
get rid of them.
Yeah, let's just get rid of them.
Right.
So let's talk a little bit about the housing boom, and I guess what Fannie and Freddie's participation in that really was. I mean, you started to say that they didn't really go go as far out as some of the other private lenders.
Right.
But what were Fannie and Freddie doing during this period?
So Fannie and Freddie definitely contributed to the bubble, and their need to satisfy these affordable housing goals definitely contributed to the problem. I just don't think it's the sole cause of the financial crisis. By the mid-2000s, Fannie and Freddie's market share had been cut in half as this sort of subprime lending, where instead of mortgage originators selling their mortgages to Fannie and Freddie, they were selling them to Wall Street firms and totally bypassing Fannie and Freddie, cutting them out of the market. And that's what all the haters of Fannie and Freddie wanted to see happen, right? Have Fannie and Freddie cut out of the market. The problem was the standards for these loans were getting riskier and riskier and riskier. So around 2005, both Fannie and Freddie did two things. They started buying some of these Wall Street securities for their own portfolios and using them to meet their affordable housing goals. And they decided, we need to get into this business too. And you can trace that through market share numbers, through interviews with executives, through executive presentations. They were terrified that they were losing their profits, losing their hold on the market. So they began to guarantee riskier loans too. Mm-hmm. You can see by the numbers that the loans they guaranteed were never as risky as the private sector loans that helped bring down the system. The default rate on comparable GSE-backed loans versus Wall Street loans is like a fraction of the default rate. But nonetheless, it totally contributed to the crisis, and it was enough to create the perception that Fannie and Freddie needed a bailout.
Right. So I mean, one of the things that that people also allege in the run up to the crisis is that it was not only Fannie and Freddie who decided to take on more risk, but that these affordable housing goals and the government were trying to get them to take on more risk. I guess through your research, where do you come down on that?
I think it was some of both. I think the companies did some of what they did to satisfy affordable housing goals, but they did a lot of what they did in order to increase their market share and keep and produce profits. And you can see that through executive presentations at the time. How do we keep up with the market? How do we keep our profits? We need to be relevant. So you can't be simplistic about it. You can't say it was one thing or the other. It was both. It was a mixture of reasons. Why they did it.
Whose job was it to make sure that didn't get out of hand?
Right. Well, Fannie and Freddie were overseen. They were regulated. They had a government agency called the Office of Federal Housing Enterprise Oversight, whose only job was to regulate Fannie and Freddie. And the regulator knew that they were going into riskier loans and didn't think twice about it and didn't rein them in.
Was it a staffing issue or was it a political issue?
I think it's a competence issue in some ways. I think there was a competence issue, and I say that not meaning to categorically say people were incompetent. There was this idea that the private sector knew what it was doing, right? That if lenders were making these loans and if Wall Street firms were buying them up and if investors were buying the securities, well, then everybody knew what they were doing. And everybody was analyzing the risk and making sure the people could pay their loans back. And I think no one realized, it sounds crazy, but no one realized until it all went to hell in a handbasket that no one was doing that work. And in fact, people couldn't pay those loans back.
Right, and kind of part and parcel of that, in addition to making riskier loans, you had Fannie and Freddie start to invest in some of those securities that the private market was putting together.
I think it's the biggest irony and one of the most sort of twisted, tragic parts of this story, that one of the things that brought Fannie and Freddie down, that created all the losses that led to the perception that they needed a bailout, they started to buy the Wall Street manufactured securities and hold them on their own balance sheet. And so when those securities started to lose value, Fannie and Freddie had to take huge losses on them. And what they were doing, buying loans that had already been packaged up and sold off to investors by Wall Street, I mean, that's got to be one of the more screwed up things in kind of the history of this whole.
Money, as you said.
Right. And they were trying to satisfy their Wall Street packed those products with loans that satisfied Fannie and Freddie's housing goals. So they were trying to satisfy their housing goals too.
Right.
So, but I want to pause on this issue of the housing goals and the crisis, because I think there's this really widespread misperception that I think is actually kind of worse among people who understand the issue, because it's almost intellectually dishonest, that putting people who couldn't afford homes into homes is what caused the crisis, and we should never do that again. It was not. The majority of risky loans that were packaged up and turned into securities were not made for the purposes of homeownership. They were made for refinancings, usually cash-out refinancings, whereby somebody takes out a bigger mortgage, takes the cash, uses it to pay off bills, pay down other debt, maybe go on vacation, maybe remodel their house. But if you hadn't made those loans, and you hadn't done all the crazy investment loans where people were buying 7 or 8 properties and trying to get rich, there would not have been a financial crisis. So the crisis has become this referendum on homeownership. It's as if it proves this idea we should never extend credit to people who might be on the margins of being qualified for homeownership, because look what happened in the financial crisis. It's not a referendum on that one way or the other.
Yeah.
There's been academic work done showing that the majority of defaults in the financial crisis were actually from quite affluent borrowers. Who didn't pay their refinancings, their cash-out refinancings. So it's a referendum on extending credit to people who can't afford to pay it back, and on the sort of rampant, crazy extension of credit to borrowers at every income level. But it's not a referendum on homeownership.
Yes, interesting, because there have been entire books written, even ones that have come out recently, that they kind of blame Fannie and Freddie and the affordable housing goals for the crisis. So I guess why did this become a cause célèbre for? I think
it's a really clear way to, one, it makes people like to simplify complex issues, right? And even if it's only the illusion of clarity, it feels good, it feels like clarity. And I think if you can say the government caused the financial crisis, you've got a really clear, simple explanation, right? And you don't have to say, oh my God, it was all these complicated factors. You can just reduce it to this one simple thing. And I think that's part of its appeal. I think the other part of the appeal is an anti-regulation appeal. If you can say that Fannie and Freddie and the government did all this, then you can say, well, we don't need any more regulation for Wall Street. And don't get me wrong, I'm not a believer in regulation as the cure to all problems, so I don't mean to sound pro-regulation. I'm actually quite mixed on that point. But you could get rid of Dodd-Frank, right? If the whole problem was Fannie and Freddie, then you don't need Dodd-Frank. Throw it all out, right?
Right.
So I think, and then on top of that, you can of course get rid of Fannie and Freddie and never have the government in the housing market again, because look what it led to.
Right.
So I think it's this very, very appealing argument, and it's gained an enormous amount of currency, despite the fact that I just think it's readily disprovable if you spend a little bit of time thinking about it.
Right. So 2008. When everything started to go downhill, when did it start to become apparent that there were serious problems at Fannie and Freddie? And then what would have happened had the government not stepped in?
So really, the last one I'm not sure I can answer, but this sort of directly relates to this idea that Fannie and Freddie caused the financial crisis, because the notion is that that fear about these loans that were backed by Fannie and Freddie started tremors in the global financial system, and that then spread to private market loans, and that's what brought down the whole system. Just categorically not true. Fannie and Freddie stock prices were at all-time highs, and the first real tremor was when a French money market fund couldn't pay because of losses on U.S. subprime mortgages, which were purely Wall Street mortgage-backed securities, nothing to do with Fannie and Freddie. And then this giant lender called New Century, that was one of the big subprime lenders, was bankrupt in the spring of 2007 before there were even tremors at Fannie and Freddie. But as the year went on, the financial crisis was so odd. It wasn't one big conflagration, right? There kept being this eruption, and then things would calm down a little, and then there would be another eruption. And as the year 2008 went on, people got increasingly worried about Fannie and Freddie, because you could see that they had a lot of riskier mortgages on their books. And if you've got a giant housing downturn going on, you have two highly leveraged institutions whose sole business is taking the credit risk of U.S. homeowners. They're going to have a problem, right?
Sure.
And I think arguably there could have been a huge loss of confidence in them, even if they hadn't ventured into guaranteeing these riskier mortgages. So by the summer of 2008, their stock prices were plummeting, and there was great fear that they wouldn't be able to raise money in the markets, and the whole machine would grind to a halt. And I think it's fascinating, because we generally think of globalization as this good thing, right? Well, not always. But Hank Paulson, who was Treasury Secretary, tells this great story about being in Beijing for the Summer Olympics and hearing a story that the Russians were trying to get the Chinese to dump their holdings of Fannie and Freddie backed securities in order to create chaos in the global
Right.
economy. And then there's this Chinese financial official telling Bloomberg that if the U.S. government lets Fannie and Freddie to fail, it's going to be the end of the global financial system as we know it.
Right.
So there was this idea that if these two companies were to go down, their securities were everywhere. It would disrupt foreign central banks, foreign global relations. It would just wreak havoc through all the banks that held these securities on their own balance sheets. It would shut down the mortgage market. So there was this perception that we couldn't let these two companies fail.
Right. Yeah. It's interesting, because having so much interconnectedness, and the MBS having such a large market, even if you're not sure of what the probabilities are that Fannie and Freddie are going to fail, if the consequences are so dire that you have an outcome like what the Chinese were saying, you'd rather act.
Right.
And be wrong than roll the dice.
There's a huge sort of subterranean fight over whether Fannie and Freddie really needed a bailout, and I tend to cut the government a little bit of slack for what it did in the 2008 financial crisis. Look, it was a financial crisis. I mean, it's easy to look back now and say, oh, people could have done things differently. Maybe this company didn't need a bailout. Maybe we could have let them fail. Hindsight really is 20/20, and so I tend to think that arguments about what happened in 2008 are a little beside the point. So, although there are arguments, which is why I caveat what I say.
Sure, but yet the way they put them into conservatorship, it was the genesis of why things are still so screwed up right now.
Yeah.
So I guess talk a little bit about why they use this process called conservatorship, and the sort of structures they set up around that.
So conservatorship is actually a really well-known thing. It's how the FDIC saves a failing bank. It's and the laws governing Fannie and Freddie's conservatorship are basically lifted straight from the FDIC and how they rehabilitate a failing bank. So it wasn't like the idea of conservatorship was anything new. That said, there are a couple really weird things about Fannie and Freddie's conservatorship, right? One is that the terms of their bailout were so much tougher than the bailouts of the big banks and the bailout of AIG. AIG is back to semi-normal, but back to being a publicly traded company, right? The big banks, their executives didn't even get fired. They're back to paying their shareholders and executives, tens of millions of dollars in bonuses. Fannie and Freddie, uniquely, conservatorship has become a kind of prison, a limbo from which it seems like they will never be released. And there's been some argument by former FDIC people that, look, this is not what conservatorship is. Conservatorship is rehabilitate, put companies on a sound financial footing, and put them back out there. It's not kind of a license to steal the profits of these companies forever.
Yeah, it's interesting because, the FDIC has its conservatorship law, and then for the conservatorship of Fannie and Freddie, a whole separate law called HERA was passed that kind of created these different structures, and sort of people thought they were familiar with the concept of conservatorship through the FDIC. And a lot of times the FDIC used conservatorship as kind of a stopping point to receivership, which is obviously not what the government wanted to do with Fannie and Freddie. But when the government bailed out Fannie and Freddie, it's not like they took away all of the publicly traded shares, right? They left some of those out there. So what exactly did they leave behind when the government came in?
Yeah, so it's another. I think it's kind of a game of let's pretend, right? The government left 20% of the of the securities of Fannie Mae and Freddie Mac outstanding in the hands of private shareholders. These were never supposed to have any value because the government was taking a huge 10% dividend. Any money that the government injected into Fannie and Freddie, they'd get paid 10%. On their money, huge onerous dividend, and then the government took 79.9% of the equity of both companies. So what was left if these two companies were going to lose money from here until eternity was nothing. So shareholders were supposed to be wiped out, even though there was this stump basically that was left trading. But at the time the government did it, the government said, well, you know what, the regulator, Fannie and Freddie, even said, you know what, this might have value someday.
Right. And do you think they said that and meant it, or they said that? But...
Well, I don't care if they said it and meant it or not. They said it, and so I think, and they left the stock outstanding. So even though now they may wish they didn't, and I've heard arguments from people in the government that we only did that because we had to, because we didn't want to put Fannie and Freddie's debt on the U.S. balance sheet. So you shareholders, you should know that actually you were wiped out, even if that's not what we said at the time. You should just know better.
Right. And for a period of time after the conservatorship, the shares traded like they were wiped out, right? I mean, they still traded, but they're just pennies.
Total penny stocks.
Exactly.
But then what happened is that some investors started to do the work, and they said, oh, all these losses that Fannie and Freddie are taking, there's this headline number that Fannie and Freddie have taken $187 billion in taxpayer money to bail them out. But I think isn't widely understood is that that's sort of a made-up number. Fannie and Freddie had to take money based on an accounting concept, a kind of complicated accounting concept called net worth. And net worth means if your assets are worth less than your liabilities and it's below zero, then you have to draw money to fill the hole. And this concept of net worth takes into account not only today's losses, but it says, oh, if you're going to lose money on this loan in the future, that's going to reduce your net worth today too. And so Fannie and Freddie took a lot of money based on losses that were supposedly coming in the future, but that actually never materialized. Mm-hmm. And so, in truth, the companies didn't actually lose that much money on a cash basis, but they had to draw all this money anyway. And so some investors began to do the work, and they said, oh, these companies at some point, they're going to have to reverse all these losses they're taking. They're going to be really profitable. Mm-hmm. And what do we do in America with companies that have gotten into trouble? Well, we restructure them. Mm-hmm. We figure out what makes sense, and we salvage them, and we restructure them. So, hey, this is a great bet.
Right, and then what happened?
And then the U.S. government in the summer of 2012, for reasons that remain the subject of great debate and controversy, said, oh, we're going to take, instead of just having you pay us a 10% dividend on whatever money we've put into you, Fannie and Freddie, we're going to take almost every penny of profits you make from now until eternity.
Right. So I mean, the government does give an explanation for why they did that, right? I mean, they argue. I mean, I guess you can describe that.
Yeah, you could too.
Right.
But they argue that Fannie and Freddie were going to keep losing money, and that they all thought Fannie and Freddie were going to keep losing money. They didn't see that the companies were about to become profitable, and that it would be too onerous a requirement to pay this 10% dividend. So instead, they'd just take everything that they happened to make. So if they made money in one quarter, they'd take it. If they lost money in another quarter, obviously they'd get money instead of having to. It's a little bit, if you lent me money and I was supposed to pay you $1 in interest every month, and I couldn't pay, and so you said, you know what, Bethany, I won't take the $1 if you don't have it, but when you do have some money, I'm going to take it all.
Right, and I guess part of my understanding is part of the reason they say that they structured it, that they were especially worried about this. It kind of comes back to the interconnectedness idea that we're talking about before. So they have it's at least for a certain period of time, it wasn't as if Fannie and Freddie had an infinite amount of money to draw from the government on. So to the extent that what they have left starts to get smaller, you start having investors in mortgage-backed securities in China or whatever thinking, do I have to start worrying about this?
Right. It's one of the downsides, again, of this global connected system we have, right? The ostensible reason was, well, we don't want the foreign central bank of China to be worried that Fannie and Freddie don't have enough capital. We want to make sure that their securities are safe and protected. So this makes the securities seem safer than having this requirement to pay a dividend with money they may not have.
Right. So you already mentioned that in 2012 the housing market was showing signs of a bottom, or starting to get better again. I guess so we know what the government said was the reason they did it. What do you think was the reason that they did it?
You know, I don't, it's the subject of these mammoth lawsuits, right, that are wending their way through court, and there could be things that come out on both sides that are really interesting. I almost hope this goes to trial, because I think it'll be sort of fascinating insight into the workings of the government, as well as Fannie and Freddie. But it is hard to see that the government didn't understand that the two companies were about to become really profitable. They had investors in there telling them that. And there's been some interesting stuff that has come out in the court cases, testimony from a former Fannie financial person saying they knew we were about to become really profitable. Mm-hmm. So that's strange, right? I guess I'm in the camp of, if the government had a good reason for doing this, I would like to know what it was, but the reason they've given doesn't appear to make sense, and that makes me very nervous, because I don't like feeling that we as taxpayers and citizens are being lied to, and that there was something else going on and we don't know what it was, because the apparent reason you've given just does not seem to quite make sense. I'm not saying it doesn't. You know, I've got this rule after 2 decades of covering business that you should never underestimate the amount of incompetence in the world. Mm-hmm. And it's possible that everyone on Wall Street understood these companies were going to start making enormous amounts of money, and the government actually just didn't. I guess that's always possible. It's somewhat hard to believe.
Yeah, and through my reporting, I mean, sometimes it's felt like you've got to remember that these are huge organizations, right? And so sometimes the right people. The right people don't know, you know.
It's, you know what, it is possible. It is it is totally possible. It just feels so at odds with what actually happened, given the enormity of the profits that have come from Fannie and Freddie in the last couple of years. They paid $241 billion to the U.S. Treasury. Right. So it's not like, oh, they squeaked out a few pennies here and there, and the U.S. government didn't know this was going to happen. I mean, this is $241 billion of profit. So
So just so I can finish connecting the dots there. So you think that maybe the reason they started sweeping all the profits kind of stems back to what we were talking about, the 90s and early 2000s. These are companies that people were afraid of, and you think that it sounds like you think maybe this was their opportunity to.
I don't know. I don't know. And it could be that the government's explanation is absolutely true. The facts don't quite line up with it, so that makes me a little bit nervous. There's plenty of speculation that came out through my reporting of other reasons they might have done it. One was, if these companies become incredibly profitable again, there's going to be pressure on us to pop them back to life just as they were, and these companies were the worst thing ever. How could we do that? I think there's speculation And it's certainly true that they've been used as a tool to reduce the federal budget deficit. So there's speculation that the government wanted those billions for its own purposes rather than having Fannie and Freddie keep the billions of dollars that they were making, and that could be possibly part of it. And I think some of the emails and presentations that have come out in some of the court cases suggest also that in this kind of environment of not wanting to see wealthy investors get paid, even though those wealthy investors actually happen to manage the money of pension funds and others, but there's still this kind of anti-hedge fund, we don't want to see the investors get rich. And I think there was a feeling, it was explicitly written, we don't want investors to have a payday.
Sure. Yeah, and so you just started to talk about it, but we're talking about the hedge funds that we see on TV all the time, right? Like we're talking about Paulson and Company, we're talking about Bill Ackman and Pershing Square, we're talking about, he's not a hedge fund manager, but mutual fund manager Bruce Berkowitz, which is a very popular retail fund. I mean, a lot of people own the Fairholme Fund, it's the name of his firm. So you mentioned the ones that bought before the sweep, but some of these funds also, I mean, they analyzed the legal case and ended up picking up shares after they started sweeping the profits, right? Right.
And you have a little less, I guess, sort of intrinsic sympathy for that, right? Because the ones who bought before the government changed its mind, how are you possibly to know? Afterwards, what people say, though, and I think it's actually a very fair point, is that, look, this is wrong. You can't do this. This is America. This is not the way our system is supposed to work. Bruce Berkowitz has this great line in the book. It's like I took 80% of your house in the financial crisis, and then you came back and started paying, and you were making your mortgage payments, and I said, no, I'm going to take 100%.
Right.
I mean, it feels wrong. There's another great line that I love in the book that came from a former GSE executive, and this person said, well, it feels anti-American. Then again, there are people who would argue that the GSEs were always anti-American.
Sure, and do you feel like the involvement of the hedge funds has kind of complicated this issue as to how it can be solved politically?
I think it has definitely complicated the issue. I think it's a good thing. I would argue it's a good thing for a couple of reasons, but I think it has complicated the issue because it's meant that you have these very powerful, I mean, some of the most powerful, wealthiest people and funds in the nation sort of in there suing the U.S. government, fighting for an outcome that is not what the administration has said that it wants. The investors have very much come to push for not just we want to get paid, but we want Fannie and Freddie back. And that's precisely what the administration has said it does not want. President Obama has been pretty clear, we do not want Fannie and Freddie, they've got to go. Right. So it's certainly complicated matters. I argue it's a good thing for a couple of reasons. One is, I don't think we want the government to have a free hand, to make decisions behind closed doors. This is an issue that affects every American in some way or another. It affects the interest rate you pay on your mortgage. It affects the availability of mortgage credit. It affects the value of your house. I don't know that we want our government just making a decision behind a closed door that will affect everybody without some sort of public debate about it. And that's one of the big reasons I wrote this book. I also think that what happened in 2012, maybe the government was completely above board and everything they did was perfectly right. But don't you want to know? I mean, isn't it good to have transparency? And who else but a wealthy investor can afford to sue the U.S. government and say, no, let's look at this. Let's make sure that what you did was above board. I'm always a believer in more transparency, more answers. Let's actually see what happened. And so I've come to believe that the investors, while they are certainly after their own payday, are also sort of raising awareness of this situation in a way that I think is probably good.
Right. Well, one of the great frustrations of the court cases so far is that they're going through this discovery process, but what they have discovered isn't available to the public, at least yet. And it's not even available to the hedge funds, the people who work there themselves. It's available to the lawyers and people who are underneath this protective order.
Super annoying, right? Wouldn't you love to see that stuff?
Yeah, and also the plaintiffs appear to, I mean, as plaintiffs' attorneys do, appear to be very confident in their filings and asserting that the government lied. But every filing, it'll go something like, such and such government official said X. But because of, and then a big redacted passage, that's clearly not the case. And as you
Lies
said,
and secrets, right?
yeah, and as you said, it's almost if all you've got is a plaintiff's attorney, if you're on the government side and all you've got is a plaintiff's attorney characterizing these documents, basically the worst reflection of those documents is coming out there.
Right.
But a judge just recently decided that, at least for the time being, these documents aren't going to be made public.
Right.
So one of the, and this came up in another talk you gave just a couple of days ago. So some of the hedge funds, which don't want this litigation to go all the way, to the Supreme Court or wherever it ends up, their investment return can be more positive. It ends more quickly, and they're hoping the government will decide to settle, right?
Yep.
And one of the ideas is that if we can make this discovery public, then it'll be so embarrassing that or the threat of it becoming public will be so embarrassing that they can move towards settlement. What do you think of that strategy?
Well, I don't like that as an answer because I want transparency. I actually want to know what the government was thinking when they did the Third Amendment and when they decided to take all of the GSE's profits. So I don't like the idea of possible government misbehavior being squelched or covered just so the investors can have a settlement, right? And I feel like it's kind of anti-transparency. That said, one of my fears about where we are today is that there will be an external shock, like victory in the lawsuits for the hedge funds, or like an incredibly embarrassing document that the government doesn't want to become public. So they will settle with investors. Or there'll be some sort of shock that will force Fannie and Freddie to go back to Treasury and take more money, and then they'll become a huge political football again. And so instead of making a well thought out decision about what the structure of the mortgage market could look like, again, an issue that matters to every American, we're going to lurch into some sort of half-baked answer in order to avoid discovery, in order to avoid the political brouhaha over another loss at these two companies. And I think that's a really frightening prospect.
Right. So the Obama administration has been adamant for a long time that they want to see Congress solve this, or that they in Congress will solve this. Are we getting anywhere with that idea?
No. Well, the Obama administration has been a little more pointed than that, I think, and you know this issue too, so correct me if I'm wrong, but they've been pretty clear. They want Fannie and Freddie gone. So Obama even said in a speech in Phoenix a couple of years ago, it was, heads you win, tails I lose. It's wrong. These two companies have got to go. So they've been insistent that they want private capital to finance the American mortgage market. So we've got this kind of disconnect going on, and tell me if you sense the same thing, but I think there's this pretty widespread acceptance that if it were not for some sort of government backstop in the housing market, this fixture of American life, the 30-year fixed-rate prepayable mortgage, wouldn't be there. And it certainly wouldn't be there for most of the population in all economic times. It might be there for the very wealthy, might be there for more people when economic times were very good, but it wouldn't be this fixture of American life as we know it. So I think there is actually an acceptance that we don't want to pull the plug on some government presence in the housing market. Yet there's this anti-Fannie Freddie rhetoric. And so it's kind of a stalemate of, well, what do we do? So the most serious reform was Crapo-Johnson, Corker-Warner bill that wasn't it the spring of 2014?
It seems a long time ago.
I know, it does. Yeah. It does. But, there's an argument that bill sort of recreated Fannie and Freddie. I mean, it was a different structure, but you still had a government backstop in the housing market. So if you're still going to have a government backstop, sort of better the devil you know, why not reform Fannie and Freddie and give them better regulation, make sure that their incentives are not to produce extraordinary profits for their shareholders and executives, but rather to run the businesses safely, structure them differently, maybe even toss in some counter-cyclical measures. So if the mortgage market is going insane, Fannie and Freddie pull back from the mortgage market. But why wouldn't you try to fix what you have instead of starting from scratch with a totally untested system that is going to support the most important asset in most Americans' lives?
Right. So I guess what do you feel like should be happening right now then?
I'm somewhat torn on this. There's a part of me that has always disliked the cult of homeownership, even though it has been part of our society from the beginning. I felt like we needed to do a larger rethink of both this notion and of how we finance home ownership, and a larger rethink down to, if you're doing a cash out refinancing, should that be treated just like if you're buying a home? If we're encouraging home ownership, why are we also encouraging people to treat their home as a credit card? Those are two antithetical things. They're not just different, they're antithetical. So why does our system of laws and tax laws and mortgage credit enable both equally? Shouldn't we do this larger rethink? I'm not sure we're going to do that. And so I've started to believe I'd rather see a reformed Fannie and Freddie with much tighter regulation, much limits on what their executives can make, maybe structured like a utility, right, with an acceptable rate of return, rather than a kind of swing for the fences, make whatever you can and get rich structure. It's sort of, I've used this line, but it's like Winston Churchill's famous line about democracy, right? Fannie and Freddie are kind of the worst possible system until you start to consider all the alternatives.
This is something that I spend a lot of time thinking about, and I know why Fannie Mae and Freddie Mac, which are the subjects of this book, are important companies. But why don't you start by telling us a little bit about why you wrote the book and why Fannie and Freddie are so important to kind of the broader populace?
Okay. So I started covering Fannie back in 2004 when I was still at Fortune, and in the wake of this big accounting scandal, each company had a big accounting scandal. And at the time, I think I was shocked to find out that companies like this existed. I mean, what is a government-sponsored enterprise? And what a government-sponsored enterprise in this case is Fannie was created back in the wake of the Depression by Roosevelt in order to help make homeownership more widely available. And the idea was that if you had this institution that could buy up the loans that banks, lenders had made, then that would free those lenders to go out and make more loans because they wouldn't have to worry that their capital was all tied up in the loan they had made. So the idea was this would help foster homeownership. And that was the beginning of Fannie Mae. And this very unique investor who buys them has to worry that interest rates might change, right? But they don't have to worry that you, the homeowner, are going to be unable to pay because Fannie and Freddie are guaranteeing that. So that system has turned American mortgages into something that buyers around the world can invest in without thinking twice, because they don't have to go through and analyze 100,000 Joe Lights and make sure all of you are really going to pay your mortgage. Mm-hmm. They can just buy these securities, knowing or feeling that they know that the securities are safe. And the way that system has developed, it means that a saver in China can and does finance the purchase of a home in Kansas. So it's turned, I think it's ironic in a way, it's turned American home ownership, I mean, what's more domestic than a home, right?
Right.
Into a global financial issue.
Right. And this is something that's unique to the United States, or at least to the United States, and maybe one or two other countries. So what does having this system in place give Americans that somebody in the United Kingdom getting a home won't get?
So that's part of a debate, right? There's some people who say if you got rid of Fannie and Freddie, there would be no impact. It has wealth tied up in a house. It's an issue for every investor because these $5 trillion of securities move through the global financial system like water. They're everywhere. If there's a change in the value of these securities or a lack of confidence in them, that will have global economic ripple effects.
Right. So let's back up a little bit, because I think a lot of people don't understand, literally what the function of Fannie and Freddie are. So I'm a homeowner. I go to my bank or lender to get a mortgage, and the lender grants that to me. So what happens then, and how is Fannie involved?
Yeah, so that's what's known as the primary market, when you go to a lender and you get your mortgage. But those lenders don't keep those mortgages anymore. At least they mostly don't keep those mortgages. They sell them off. And most of them, in the years since the financial crisis, the great majority of them get sold off to Fannie Mae and Freddie Mac, who then take them, package them up, and sell them off as securities to investors around the world. And the existence of this system, and Fannie and Freddie act as an insurance company. They guarantee the timely payment on those mortgages. So the investment in the United States, no other country has it. No other country has a 30-year fixed rate, fully prepayable mortgage either, the way
right.
we do. And most people credit that to the existence of Fannie and Freddie. And so these two companies have grown to be absolutely enormous. Fannie and Freddie together are the largest financial institution in the world. They own or guarantee over $5 trillion
Right.
of mortgage-related debt. They're absolutely enormous. They're critical to the functioning of the global financial system, and they're sort of part of the hidden machinery that makes our lives possible. You know, when you go to the bank and get your mortgage, you expect to have a mortgage rate quoted to you
Sure.
right then and there. And for decades, Fannie in particular has been part of what has made that function seamlessly.
Sure. Yeah, and so I think in recent history, a lot of people know them as the, one of the first two companies to be taken over by the government. Some people say that they were at least partly responsible for the financial crisis. And I mean, a lot of people think that this is a problem that the government fixed a long time ago, right? Like, isn't this like a 7-year-old problem? But now kind of here we are, and I guess how far have we gotten?
We haven't gotten anywhere. That's part of the problem. So the idea was there's the silver lining in the global financial crisis, right? I guess I should back up a little bit. You're exactly right. They were the first two companies that were. I guess there was Bear Stearns first, but then Fannie, but was sort of bailed out by J.P. Morgan in a sort of private transaction, right? Fannie and Freddie were put into this state called conservatorship, where they're supported by a line of credit from the Treasury and effectively managed by a government agency. And when they were taken over in the fall of 2008, the idea was this would be temporary. Conservatorship was supposed to be temporary. We were going to figure out how to reform the housing finance system, and we can talk about why people think it was problematic beforehand. We were going to reform them and get on with it. And yet here we are, 7 years later, these two giant companies are still in this state called conservatorship. And this big public policy question, what do we want housing finance to be like, is still totally unresolved. I think that's an issue for every American with a mortgage. It's an issue for every American who